Yeah, it's your boy Crypto Blood, and welcome to part 2 of the Kicking It session with Jim Willie, golden jackass, legendary in the alt media realm. Listen, we've got reverse repos, POMO, Exchange Stabilization Fund activity, Credit Suisse is in trouble from his sources, gold or GLD Fund Crisis. We're going to look at all of this, so get your notepads out, pen and paper, jot this stuff down. And you guys actually sign up for his newsletter as well. You're going to enjoy this. And don't forget to like, share, and subscribe to find more videos like this. You can get them early if you sign up for my membership on YouTube. Just click the join button and select the various membership levels I have available. Let's get into it, people. Holla! The mainstream media, yields are steepening. That means everything is okay. No more flattening of the yield curve. What is your assessment?
That's a pure lie. The yields are steepening because the supply is so great, and people are realizing that the bond building's on fire.
So they're not willing to buy any more bills. Is that what you're saying?
Well, who's buying? Yeah. It's a very big question, Jerry. I don't mean to put you on the spot, but one of the things I study here in the hat trick letter is who's buying bonds. Japan stopped.
Yeah.
China stopped. Germany stopped. Who's buying bonds? We're buying our own. That's the answer. The Treasury Department is buying our own bonds. This is Zimbabwe, dude. We're buying our own bond. We're monetizing our own deficits by buying our own bonds. And if you think, well, gosh, this is new. No, corporations are buying their own bonds and selling their bonds and buying their own stocks, and it's a mess. We're monetizing ourselves and our own debts right now. And the biggest player of all is the Department of Treasury with their Exchange Stabilization Fund using the vehicle called interest rate swap derivatives. And I think they're blowing up. I think they're under not blowing up, they're under great strain. Let me give you a nice little analogy. A little story, anecdote, that's the word, not analogy, anecdote. Remember back about 3 years, they started the interest rate hikes. After each hike, I looked to see what else did they do. Well, when they raised the first time about 3.5 years ago, 2016 something, they raised by 0.25%, but they also dropped the repo rate. So they compensated.
So it's a net zero.
Not exactly, but close.
But close, right.
Okay, the second interest rate hike, I looked to see what else did they do? And they made an adjustment to the excess reserves payout that big banks, I think they cut the excess reserves. So what they were going to do is they're going to give less to the savers. Just think of Joe Schmo with a huge $700,000 account in Florida, retired, and he likes to live off the interest, so he buys treasuries. Okay, so Joe Schmo is screwed. He's been getting very little since 2012. And that's why the older generation now are complaining so much, because they've become destitute. Okay, then another interest rate hike came, and I asked, what else did they do? And what they did was they encouraged all the big banks to reduce their cash and buy more treasuries and leverage on the treasuries 100 to 1, so we wouldn't have any treasury auction failures. So the answer to the simple question, who's buying all these bonds? It's the US government with the Exchange Stabilization Fund, but it's also Wall Street banks who discharge their cash to buy bonds, which is reverse repo.
Right. We talked about that a little bit on the last video, the reverse repo.
Repo is simple. A bank's in trouble. They're out of cash. They got a bunch of treasury bonds. They go with $1 billion to the window, and they say, we need a 24-hour loan for $1 billion. Thank you very much. We need the cash. The reverse repo is the other way around. We got some cash. We can help you out by buying some treasuries. And if you give us permission, we'll buy 100 to 1 leverage so that you can avoid a treasury auction failure. So why are we avoiding auction failures when we're in so much trouble with lack of buyers and a load of supply and new debt? Because we're using the Department of Treasury Exchange Stabilization Fund with the interest rate swap derivative and encouraging banks to lower their footprint and increase their height of the building. I think of the Sears Tower. It's now half as much in the footprint for the lobby, and it's now 200 stories high. So if you've got the Sears Tower that's skinnier and taller, its risk is clearly high winds.
Interesting.
What's the modern day equivalent of high winds? Little market crashes, little pockets of crisis, like the repo. Okay, now remember, repo is a 24-hour loan. What does the Fed do if, say, let's say Wachovia comes in, not a primary Wall Street. Wachovia comes in there and says, we got 10 billion. We need 10 billion. We got 10 billion in treasury bills and we need 10 billion in cash. And it's a 24-hour loan. They come back the next day and say, we don't have 10 billion. We only got 5. We need to roll over that 5. They say, okay, we'll do it again. You got another 24 hours.
Just move the goalposts.
And it's a mess. So then the Fed says, wait a minute, you're not getting anywhere here after 2 or 3 days. You're not making any progress. We'll take 9 of the 10. And we'll put it on the Fed balance sheet. So it's no longer repo, it becomes POMO.
QE.
No, yeah, okay. But I'm getting technical here first. It's Permanent Open Market Operation.
Right.
The result of which is it's put on the Fed balance sheet, and we call that in our own lingo, QE, quantitative easing. Because quantitative easing, QE, sounds good. We got modern monetary theory. We got PhDs from Princeton running things. It must be good, right? We got Goldman Sachs in the room, right? They know what they're doing, right?
Jeez.
Okay, so where we're going. Okay, this is the beauty. Where are we going? I remember doing the October report, and that's when the repo overnights were moving from 40 to 60 to 65 or whatever billion per night.
Yeah.
When the Fed was admitting, okay, now try to separate repo from POMO, okay? Repo is the 24-hour emergency. We got some collateral. We'll fix it tomorrow. POMO is, you guys are a mess. We'll take it and put it on the Fed balance sheet. That's QE. Okay, so the repo was getting big and getting out of control. And I reasoned if it gets too much larger, they're going to have to move to QE to relieve the temporary overload.
Gotcha.
Okay? That's how the temporary becomes QE. Overload. Okay, when I was doing the October report, it's kind of funny. During a 10, 12-day period, I knuckle down and I don't go anywhere. I don't have much fun. I don't exactly eat at the desk, but I don't have much fun. I just work and lose track of time and hope that I lose track of time, because that's when it becomes labor of love.
Yeah.
And I do have labor of love, and I noticed that it happened on Wednesday last week, where suddenly, my gosh, I started at 6:30 in the morning. I missed lunch. It's almost 3 o'clock. What the heck is going on here? Okay.
Yeah. That's
labor of love. And I did the whole bond chapter that day, collecting notes. And I do it last because there's more to come tomorrow before the deadline. So let it come in, and I'll do it in the last 24 hours. I save the toughest chapter for last so I can make it the most current. Okay, so I reasoned during those 10, 12, 14 days in October that, holy moly, this was like 40 billion a night in repo, and now it's 70. Oh my gosh, I'm ready to go to print. It's 110. Okay, that's just a 10-day period. So I made sure that I captured a lovely zero hedge chart. They're great. They've overloaded their site with bells and whistles and, oh gosh, all these different links and, oh man, advertisements. And I used to have it freeze up, but then I realized, oh, wow, I can move it to Chrome and not freeze up my computer.
And better yet, I told you offline, Brave browser will eliminate the actual ads altogether. So it runs the best, Jim, on Brave browser.
Well, that's why I like talking to guys like you, Jerry, because, I learned something. We were talking about something before
we
went to record, and I'm going to check that out too. Okay, so Repo and Zero Hedge.
Yeah.
So now I take the link and I copy and I paste it over to Chrome, and doesn't freeze my computer. I can grab something without having a 5-minute delay. Zero Hedge, you need to fix your act. Okay, so I grabbed a couple of great charts, and that was the chart of the months to put on the front next to the link for the October report. It's all a lot of fun. I have a lot of fun in my design work and this and that with the newsletter. And gosh, my banana for the stars, the stripes are normal, white and red, but then in the blue area, you got a nice big banana. The Banana Republic. Why Banana Republic, Jim? Well, because we got a huge amount of debt, and we're buying it ourselves, wrecking the dollar. That's what third world countries do. It's modern monetary theory gone amok, where we think it's failure proof, and it is not. Okay, so by the end of October, I realized, okay, my forecast that I made in August is coming true. We're going to have infinite QE. I concluded in the October report, we are now seeing evidence that QE to infinity is coming, and it's rolling out in front of our faces.
Yep.
Okay, so that led into the November report, and by then we had a couple of days with 200 billion in one night. Okay, now I've left the pièce de résistance. I speak French. Je parle français. My second language is French.
I didn't know that.
Je m'appelle Jacques. Je parle français très bien. I actually got the junior year high school French award in my high school out of 200 kids. Now,
interesting.
What did that do for me in life? Jack shit! Should have taken Spanish, Jimmy boy.
How do you say crypto blood in French?
I don't know. Sangre. Sangre. I think it's sangre. Sangre. Anyway, I know. I'm trying to forget the French, but what I've noticed is the French help me with the verb construction.
Gotcha.
And the reverse formation of many verbs. Like we say, I like that. But the Spanish say, me gusta esto. That pleases me. Me gusta esto. By the time we got to November, we were in very deep shit. And the question to me was, is it going to be recognized as infinite QE? And I thought, it'll take a while. We might need some bigger deficits to deal with, to scare people. And then they'll have to do some analysis and actual thinking. How are we going to support this larger debt load? Oh, modern monetary theory will just print more. Where's it going to go? Who's going to buy it? How are we going to fake it?
Right.
Wall Street will manage it. And behind the scenes is the wizard. Behind the curtain is the Exchange Stabilization Fund with at least 10 trillion in core assets. Managing the mess. And something happened. I got word. It was about the end of November. I remember I had a conversation with Dave Morgan in mid-November. In mid-November, it was about Credit Suisse. But in late November and early December, I got word from somebody else. And he did not want to be mentioned. But let me just get first of all, the mid-November Credit Suisse rumor is more than a rumor. Dave Morgan said to me, Jim, I have a guy who I know well. He's a popular speaker at conferences. He's occasionally a keynote speaker. And he's got some direct contacts to Credit Suisse. Now, remember, the two big Swiss banks are UBS and Credit Suisse. What I did not know about Credit Suisse was that it is a U.S. registered bank. operating completely in Swiss lands. Okay, the rumor story is more than, I don't like the word rumor because that sounds, I heard it. No, the story with solid integrity and reliability was that Credit Suisse was having tremendous difficulties reversing their leverage and unwinding some very big trades. And that is all I heard from Dave Morgan. So begs the question, what trades? I mean, I don't like to just sit back and say, oh, that's interesting. I'm going to lunch now.
Right.
No, I say, that's interesting. Does that not promote three very important questions? Let's see how far we can go with this, Dave Morgan. Dave's a good guy.
Yeah, I like his work.
And he surprised the hell out of me. The next morning, there was a very nice donation from the button from Dave Morgan. I wrote him back and said, Dave, what are you doing? And he said, I'm helping you out, Jim, helping you out. I said, well, thank you. May God bless you, man. But I said to him, well, begs the question, what trades are they trying to unwind? What arbitrage giant structure loaded with debt did they try to unwind? And I said, well, way back in 2012, Dave, they were doing the 120 euro Swiss peg because the money was exiting Europe and going into Switzerland, raising their currency so much, it was putting in danger the entire Swiss economy and their export trade. He said, yeah, I remember that, Jim. I remember that well. I said, well, do you also remember that back in 2016, they admitted that there was more to it? There was four-sided. It was euro, Swiss, gold, and dollar. And they were blamed for pulling down the gold price from 1900 all the way down to 1300. The Swiss were the primary agents for pushing it down. And he said, I don't quite remember that. And I said, I do. That's what they're trying to unwind. Now, here's corollary to leverage trading screw-ups. Corollary. When you have trouble unwinding it, you go right back to where you were. So I think we're likely to see a run up in the Swiss franc currency. And we're likely to see the gold price go back to 1900.
Interesting. What's your time frame on that, Jim? For gold?
Sometime in the next several months and in the future. It's not going to be the past. I'm focusing on the future. I don't think it's going to happen with the forecast backwards. I think it's going to happen sometime in the future, Jerry. Don't hold me to it. Timing is very difficult because we have no idea the extent to
manipulation.
Well, I don't like the word manipulation. I like the word deep-seated corruption. Okay.
Better fitting.
A year and a half ago, the deep-seated corruption came with completing the second side. They had the short selling all under control for the last 15 years in gold. Short selling. Volcker put in place the sell-only market for the COMEX. Right. He's quoted to have said, after his retirement, in his later years, like 4 or 5 years ago, my biggest error was not smashing gold more. So that's not the responsible good guy. Right. Honest broker. I call them honest brokers. I try to be an honest broker of analysis and information. Volcker was not an honest broker because he wanted to smash gold, protect the dollar. Okay, so here we are. Credit Suisse is in trouble. And we don't know how long it will take them to unwind because we don't know how long it will take them to get help, funny money, bailout money, repo money. I think they're in line for the repo. Okay, I got diverted there. We've had this 15 years or more of short paper gold selling. We've had a year and a half of completing the cycle. It's called London's Exchange for Physical. The volume for exchange for physical delivery, it's becoming a farce. They needed to do something to complete the farce and to, it's like you got an open wound and you need to seal it. So they sealed it with an equally corrupt device. The volume of the exchange for physical London deliveries is now an order of magnitude, like double, triple the global gold output. Okay, so it's gone ridiculous. And it's attracted some attention that they don't want. They were forced to do something, and they didn't want attention, so they tried to lie as best they could, but the data could not be denied. The volume of EFP, Exchange for Physical London LBMA gold delivery, is out of sight. And Butler is all over this. I think Coos, oh gosh, there's a guy named Manley and Coos, not Jordan, Coos, oh gosh, I can't think of his name. It's Bullion Star.
Oh, Marina Kukuza?
Manley. Ronan Manley is one of them. Coos, I don't want to say Coos Jordan, that's not it. Coos something. Anyway, they're at Bullion Star. They're all over this. And now some analysts are all over this. And by this, I mean the volume that's out of sight in London. And in the last 2 months, they've added on another fraudulent device. They don't have just registered and oh gosh, what are the two categories? That registered and eligible gold. They've now made a third category called pledged gold. And I think pledged gold is stolen gold. I think pledged gold is hypothecated gold from bullion banks to gather out the rest of what's not being watched closely. And I got a little story on the side about the GLD fund, which is a favorite for those people who think it's got gold, but it's not. Trades like a stock, but surely does. So they can maybe hedge against the gold price by buying or selling some GLD stock, exchange traded fund. But those idiots who are long-term investors in GLD don't realize it, but they're supporting the gold suppression because all the backed gold in there is being trucked out and sent into the gold market, which betrays those investors. And it's all in the prospectus that those clowns never read.
Yeah.
Okay. There's something very important about the GLD fund that I like to point out. And this I give some credit to Euroraj, who's a colleague of mine. He's a really smart guy. He's a former London banker, analyst, and now he's in the United States. I'll just say he's in the United States, and that keeps him from being, fingered. He's a really smart guy. He's very generous with me. We have a lot of fun because we got some background that crisscrossed a bit. Just leave it at that. He's a nice guy. He's very generous to me. I keep saying that. Every 2 or 3 months, I send him a thank you note. It's after posting a report, and it has some of his contributions in it. But I'm sorry, but I lost my train of thought.
You were talking about Euroraj and
GLD. Okay. The GLD fund has been drained of its inventory slowly but surely. Okay. The GLD fund is reported to have, 550, 580, 530, 610 tons of gold. And I came to learn that there was a lot of reports, a lot of, just maybe more rumors, more like, coffee talk conclusions. That's maybe better. Important points to make, made informally, that the GLD fund is in trouble if it gets down toward 500 or 550. And Euroraj and I were wondering, why is that? And Euroraj had a nice term for it. He called it effective zero. He said 550 to 600 is effective zero. I said, what do you mean by that? Can you define that? And he said, yeah, sure. It's all the gold in motion. Okay, suppose you've got Newmont and 18 other big mining companies saying by January 1st, or more like by December 20th, we're going to be shipping X tons of gold to the COMEX or to their subsidiaries that deal with, the logistics. Okay, so add all that, then add some other gold that's being removed from, secondary sites. Now bring in some other gold coming in from Wall Street banks that they regularly ship in. Add it all up, and you get 550. So the effective zero is 550. It's the amount of gold that GLD claims, but is not in their vault. That's why I call it effective zero. And Euroraj told me, oh gosh, 8-10 months ago, he said, Jim, we're hitting effective zero in GLD. I thought, okay, well, looks like we're going to get some strains. And this might mean sometime in early to mid 2019, we might actually see gold get above the 1350 barrier. And he said, yep. And it did.
Yeah.
So the drop in the inventory of the GLD gold is a good signal of a move. Okay. I told you about, the Dave Morgan Credit Suisse. That's all fine. Let me tell you briefly about what I heard at the turn of December. I heard this from one of my colleagues. He said, Jim, don't mention my name. Don't mention his name. So I'm just going to say that it is a big name in the hedge fund industry, and it works under a Wall Street bank. Now, little known to a lot of people, including, well-meaning people who study a lot, they don't know that Wall Street banks, each of the major banks have like between, 50 and 100 hedge funds.
Because they're the prime brokers, right? Is that how that works?
The bank is the prime broker. The bank is maybe an asset lender.
Okay.
The bank is a supervisor. A VP is the denier of problems when they come. But they might be the teacher of how to do these things that result in problems, and then they deny having a role. That's the Wall Street way. Okay, here's the story. Here's a story from let's just call him Joe, okay? My colleague Joe said, Jim, this is big. This is big. There was a hedge fund algo trade scheme blow up. And that's why repo volume is so big. It's one of the biggest factors. He said, you know what an algorithm trade is? Algo trade, it's not repo. Algo trade is like a computerized algorithm scheme, rule-based trading scheme.
Yeah, I create them for crypto and FX.
Okay.
Yeah.
But you probably don't fashion them in such a way that they have 20 or 100 cycles per second.
No. They're not high frequency, and they're not linguistically based either. Those algos that they use will read headlines and all extra stuff.
There's just so many aspects to the rule-based aspect. I try not to get too bogged down in that. Pardon me. Okay, so the algorithm trade scheme blew up, and I said, how big? Joe, how big is this? And he said, it's at least a few Wall Street banks, and it's probably dozens of hedge funds. And I said, what's the impact? And he said, lots and lots of confusion, and they don't know who owns what. Now, that can come from one of two things. Going around in the cycle 10 times per second, or it could be borrowing agency A's asset overnight, taking a leveraged loan against it, and 4 hours later, zeroing out, squaring accounts, and before they wake up, return asset to company A, agency A. Now, if that blows up,
robbing Peter to pay Paul, huh?
Somebody might be holding the asset owned by A, and it doesn't get returned to A by daybreak. So, Joe concluded to me, there's a lot of confusion, and watch the Fed just bail everything out. And then I heard about 5 or 8 days later, the Fed is buying everything in sight. They don't care who owns it, who claims to own it, or whether it's worthless.
Wow.
So in the last month and a half, the Fed's balance sheet has grown a cool $1 trillion. and they're still saying it's not QE. I mean, they're just full of shit.
Yeah, they are, Jim. Let's move on to. I do want to squeeze in here before we wrap up here. Crude oil. You said it's going to lead the way, or it is leading the way. I'm sure you're aware of this Saudi Aramco IPO, the hugest, the biggest IPO that we've ever seen. It's at 2 trillion. What is going on, man? Like, does oil still play a critical part in the future? I mean, I thought the Cybertruck, I thought Elon Musk was going to take over and all the EVs were. I thought this was the future. Why is the Saudi Aramco IPO 2 trillion? Why is it that valuable? What's going on with the crude oil markets?
Okay, first of all, the 2 trillion is what Aramco's capitalization is.
Yeah, market cap, right.
It's not the IPO amount. The IPO amount a year ago was advertised and boasted they're going to try to do $200 billion worth.
Okay.
They're going to try to get 10% of the whole market cap out. And they got a fraction of that. They got 1.5%. They got shit. They got nothing. They got about, I think, 40 billion. They got 40 billion and they wanted 200.
Yeah, because then they had to like come back and try it again, right? This was the second attempt, right?
Yeah, there are 4 attempts.
Oh, okay.
London and New York said we won't touch. London, New York, Frankfurt, and Hong Kong said we're not going to touch it. And I always said the same thing. I know why. Because there's no disclosure about the actual reserves for the Saudi deposits. It's been stuck at 200 something billion barrels for 30 years. And I say, nonsense.
Can't be, right.
No, they haven't had discoveries. They've admitted that they're more difficult to achieve discoveries, and they're a lot smaller and they're a lot fewer. Okay, so they've got depletion and now they're lying. So they're trying to do a bag holder IPO and sell as much as they can to stupid people. And they found out quickly that there aren't many stupid people outside Saudi Arabia, so they concentrated in selling to stupid people inside Saudi Arabia. But it's a little more complicated than that. Saudi Arabia encouraged a lot of their wealthy to haul into it. And think of it as wealthy royals and businessmen in Saudi deciding that they don't want to hold treasuries anymore, and they'd rather go into a venture capitalist firm that's out of oil called Aramco. Okay? So they slugged in 40 billion, and they're going to hope for the best in a transition away from oil.
Interesting.
I had a client.
Okay.
Jerry, I got something juicy to tell you. 4 years ago, I date things by where I was looking out the window, where my office was, where I was living. I remember looking out the window. It must have been about 2016 then, 15. I remember looking out the window in that office, and what I was reading was an email from Contact Us. I get a lot of interesting information from Contact Us. I don't ignore it. I try to read as much as I can. I will never say I read them all. I just can't. I can't. Sometimes there are 80 in a day, and I got time to read 30, 40, 50. And I look for the category. If it says article of interest, I have a little more interest in doing so. But if it says cancellation, I got to do that. Login trouble, I got to do that. Okay, so this guy said, I have almost 20 years as a contract engineer in Saudi Arabia, and I can tell you for a fact they've got $1 trillion in metal and mineral reserves untapped. $1 trillion, $1,000 billion of untapped mineral reserves. And he said it also includes uranium, like yellow powder. What do you call it? Yellow keg? Can't remember. There's a nickname for it. Yellow Yellow cake. Okay, so I was looking in the prospectus and the follow-up articles. Are they talking about anything like expansion into the metals industry? No, they're doing exactly the wrong thing, because I don't have a lot of respect for the brain power of the Saudi royals. They're trying to enact this 2025 vision of moving into high technology.
Yeah.
Which means they're going to compete against the Americans, the Chinese, the Germans, the British, and the Japanese. Good luck with that, Saudis. That's a loser's game. So they're going to blow their money from the Aramco IPO unless they do a minimal amount of 2025 vision, conclude it's not going to work, and quietly go into minerals mining. Now, they want to get away from being a commodity producer, because that has implications of being kind of dumb industry. Not a lot of value added. You can't say, well, we took all these ingredients that cost 82 cents and we're going to sell it for $1.90. No. Pharmaceutical industry is much, much better. They say we're going to take 4 cents and we're going to charge $18. That's the pharmaceutical industry. I got just a tiny tidbit along those lines to share with people. The cost of producing chemotherapy drugs is $70 per year. And they charge $70,000 for it. So they not only encourage the onset of cancer with laced vaccines and inducing agents to reduce, suppressants to your immune system, which leads to disease and cancer. They have 1,000-fold markup on the cancer drugs. Okay, so the Saudis failed. They failed in a massive way. They wanted 200 billion in sales. They got 40. They got 4 to 5 times less than what they wanted. They wanted a 2 trillion IPO market cap. They got 1.7, but might have risen recently from stupid people bidding it up. They're going to invest in the wrong thing, in high technology, and compete with 5 or 6 different tremendously sophisticated and successful areas of the globe, and they will fail. Okay, so what's Saudi doing? They're blowing it just like they blew 40 years of oil output. That's my conclusion. They're blowing it right in front of your face. I hope that answers your question.
Yeah, that's an interesting take on it. Definitely. I didn't expect that. I surely didn't expect that.
Well, what did you expect? I mean, let me know, because I don't want to, come down on you, but what did you expect? Because there's a lot of reports out there that they're making headway.
Yeah.
What did you expect?
Yeah, that's what I wanted. Yeah, I thought maybe this was a good mark for them that showed that there was confidence in the market for oil. But at the end of the day, it's easy money flowing around. So I'm not surprised it's the most valuable stock.
Well, it's the Saudis getting out of treasuries and going into a local venture capital company.
Right.
If they notice that they said all through this IPO, they're not investing in oil. They're not investing in exploration for oil. They're not investing in petrochemicals for oil. They're abandoning oil, therefore.
Okay, so this is the exit strategy for them.
Yeah, this is the exit strategy, and I think it's the venture cap. Now, the venture cap is going in the wrong area of high tech. Yeah. They need to go into their $1 trillion of mineral reserves, and maybe they will. I think what they're going to do, and this is typical Arab stuff. And people can say, Jim, you're very anti-Arab. No, I'm not. I've evaluated and I've concluded that they're not winners. Okay, very simple. It's like saying, well, I've evaluated the San Diego Chargers. they dispatched Breeze as quarterback.
Mm-hmm.
They're losers. I've evaluated the Cleveland Browns as of 2 years ago, 3 years ago. They had 13 number one NFL draft picks, and not one of them was still on the team. I've evaluated them and concluded that they are not winners.
Hey, what about those Detroit Lions?
They're coming back. They got a good New England Patriot coach, and they're doing okay. They always provide good games, do they not? and last year they beat the Patriots, which I think was a rigged game. I think that was kind of a silver platter given to what's his name, Patricia.
Yeah.
The head coach. Anyway, okay. Enough on Saudi. I got to say something more. Okay. This is my big dig, my big insult. The Saudis really couldn't run things themselves. They've been hiring Norwegians, Germans, British, Americans to run their show. And now they're going to be hiring Russians. And the U.S. is sending troops to Saudi. Why are the U.S. troops going to Saudi? Because Saudi wants to get out of the oil industry. They want to stop supporting the dollar de facto standard called the Petrodollar. They want to invest in high tech. They want to invite Chinese and Russians, and we don't like it. They've also abandoned their Treasury bonds, but notice how few were abandoned, only 40 billion. Now imagine the terrorist events that would have happened by our boys if the Saudis had a big bumper bid of $240 billion for a bigger stake of the Aramco, and news came later that they sold a truckload of Treasury bonds to do it. So we moved the troops in, and it's a smaller IPO. Oh, what a big surprise.
Got to defend that petrodollar, Jimmy.
Yeah, I know.
Got to defend it. So, yeah, I mean, that's great, man. I'm really interested to know in your upcoming newsletter, what are some things that you're thinking about touching on in January or in the December? When is the December one?
December was posted
already out
a couple days ago.
Yeah. So, what's upcoming for January, or you haven't even go that far?
It's too lively, volatile, exciting, enthusiastic, and crazy.
Well, give some people just some sneak peeks into the December one, so they may be interested in purchasing.
Yeah, well, the December newsletter focused a good deal on how the U.S. Treasuries are slowly exiting the oil industry. Now, what is the de facto petrodollar standard? What is it? It's hoarding treasuries, putting them in as your core asset for your central bank, and using it in the oil trade. Mm-hmm. Okay? Now, what happens if you've got less oil being purchased with treasuries? What do you do to your central bank activity? You get rid of your treasuries and you start buying something else. So I think the movement to gold has begun.
Okay.
Because nation after nation, and this is all through the December report, nation after nation is making a conclusion and voting with their assets. They're getting lower on their treasuries, and they're getting higher on their non-dollar and specifically gold.
Gotcha.
So there's more to this. The Saudis announced, the Saudis are still important. Two things have happened with the Saudis. Back in March or April or so, Trump made a statement that we're not going to return $3 trillion to the Saudis in their treasury bond holdings. You see, the Saudis are broke. They got the lower oil price.
Mm-hmm.
They've got the Yemen war. And secretly, they've been the principal agent behind funding ISIS. ISIS is our creation.
Yep.
And the Saudis have been working with that along with the UAE. So the Saudis are broke. And this spring, they made an appeal to the U.S. government. We need our $3 trillion back. And we said to them, no, you need to read the fine print of the Petrodollar contracts. We've been supporting your sorry asses for the last 40 years. And now we're not going to give it back to you because we need it. And between the lines, you can say, we need it to support the Exchange Stabilization Fund and its multi-trillion-dollar market rigging mechanisms. Very big news story, and it followed the big event a year ago where we're trying to blame the Saudis for 9/11 and keep all their assets in the United States and not return them. And I think at the same time, we told the Saudis, if you try to make a big deal about this and have lawsuits and forced discovery, we'll start killing you. Okay, the second thing regarding the Saudis is more recent. They've made a statement that their entire budget is based upon a $55 oil price.
Yikes.
Good luck.
Pretty. So do you think, so that's a question I do have, with the whole repo blow up and all that's going to happen, I think in the next coming months, if they can't kick this can down the road, what does the price of crude oil look like with this whole blow up? We know that gold is going to head higher. Are other commodities heading higher as well, or do you see gold being do you see crude oil being kind of suppressed?
I see,
not suppressed, but keep
going down naturally,
going lower naturally. Right.
We got a global recession, and we've got Iran coming online. Mm-hmm. Iran used to have 70 ships floating full of oil, waiting to sell. Mm-hmm. And now with the Iran nuclear deal and Trump kiboshed that, I didn't even get to a very big story, but it'd be good to sign up for the Hedge letter and read about the European and German influence for the Iranian oil supply. Because they've set something up called Instex, Germany to Iran, payment system, not SWIFT. And the Russians are all over this. They see this as a dagger in the heart of the petrodollar. So the Russians are all for it, and they're supporting it. But, this is an interesting, it reminds me of a different graph. It's not there. There's another really important point. The repo market has a big European element to it. In just the third quarter, there was over $350 billion of repo demand coming from European banks. So this is not a U.S. phenomenon. This is not 4 big U.S. banks in trouble. This is not just algorithm scheme with Wall Street screwing things up, making chaos. This is Deutsche Bank and their partners like Societe Generale in France. It's a number of Italian banks. Many of them are in trouble. It could even be a couple of more German banks.
I heard India as well. They're playing around with some repo stuff, and yeah, it's crazy.
I don't have anything on that in the December report, but there's a big new angle, Jerry, and it is that the dollar is moving out of the crude oil market.
Okay.
And I try to cover a lot of different angles of that. Euroraj is all over it with contributions and quotes. And Russia, basically the Saudis are now selling to the Chinese oil outside the dollar, and the Russians are in charge of output goals and various directives and maybe some blending responsibilities for Saudi oil. The Russians have a lot of sweet crude. The Russians have some sour crude. They buy, amazingly, the Russians buy Venezuelan oil, they buy Iranian oil, and they buy Saudi oil. And it's not because they need oil. It's because they want to make friends with the enemies of the United States and the petrodollar. So the Russians are offering to do blending for the Venezuelans, output control for the Saudis, and liquidity supply for the Iranians. And they're making friends. Okay, here's the upshot, and you'll read all about it if you sign up for the Hat Trick letter and the December report. This is all through the November and December report. The Europeans are creating a euro standard for oil purchase. The Iranians are selling oil to Europe in euros. The Saudis are selling oil to Europe in euros. What did Saddam Hussein in Iraq have as the consequence for selling oil to Europe in euros? We destroyed the nation.
Yeah.
Okay, so we got some big transition coming. We can't stop progress. We can't stop change. So we're going to have to adapt to a non-dollar oil world. And that's a big part of what I discuss in this month's report. I try to cover a good deal about the magnificent display of gold paper market corruption in the November report, and I have some continued stories in December. But I got an interesting chart for gold in this December report. Right. There may be some Elliott wave advocates out there.
Okay. Yeah.
We're ready to do a major up leg, Elliott style, nice. And the target is 17. I shouldn't say major, an intermediate. We're about to do an intermediate up leg. And it gets very confusing. You get 1, 2, 3, 4, 5, right. Up 1, down 2, up 3, down 4, up big 5, and 1, the 2, 3, 4, bigger 5. Up move is 3. But then you get the intermediate moves, and then you get everything embedded in the larger moves.
Right.
I think the larger Elliott wave move is going to take us to 3,000 gold. But now we've got an intermediate big leg coming that I think is going to take us somewhere between 1750 and 1800. And I'm excited by that because I hope it crushes the Suisse and forces them to cover and push it even higher, like to over 2000, as they lose control of their unwinding process.
Well, there you have it, guys. Another great session with Jim Willie, the hat trick letter. I want you guys to definitely get over to golden-jackass.com. That's the new domain name for the site. Donate to him if you even if you're not signing up for the newsletter. Definitely donate to Jim. Great man. He's been doing this for a long time. You're watching these videos for free. So that's the least you could do. Hey, brother from another color, right? That's what you said.
Yeah, a little bit. Just having a little bit of fun.
Have a little bit of fun.
So it's golden-jackass.com, and there's some free material in there, but sign up for the hat trick letter.
Yep.
You won't regret it. You might be bowled over by the depth and volume. It's like a magazine. I never read cover to cover Business Week, but I subscribed to Business Week for like 10 or 12, 14 years. And once I moved to Costa Rica, I stopped. But I never read it cover to cover. I picked 3 or 4 sections and read them every word and dance around other things. That's pretty much how some people treat the hat trick letter. But some are mesmerized. They say, Jim, I couldn't put it down. It took 3 hours. I couldn't put it down. Unbelievable. Wow. Okay, and that's fine. That's all well and good. But it's not a requirement. Mm-hmm. If I were a subscriber, I'd go immediately to the bond section. I'd dabble with the introduction. Then I go straight to the bond and central bank section, and then finish off with gold, and then read the rest as time permitted.
Right.
That's what I do. I love the compliments I get. Like, I was a subscriber for many years. I backed out and I came back, and I wish I'd never left. And I just, for a few years, been watching the YouTubes for free. I finally decided a year ago to sign up, and wow, I wish I signed it up 4 years ago. Would have been great. I would have learned a lot more. So it is a bit like, going to economics modern class that's unconventional. Economics and finance class.
Need nowadays. Absolutely.
Yeah, because there's a lot of bad education out there.
Yep, it sure is. Sure is. All right, it's your boy Crypto Blood, and that's another Kicking It session. We're out here, people. Holla.